I think right now, while we could end up seeing a digestion of gains, we probably still have a little further to go. And I'll say why. First off, what is causing investors to say I'm worried is that the S&P has gained almost 30% since its April 8th low. You've had every style, size, sector, and 95% of the sub-industries in the S&P 1500 post price increases. We've also recovered everything that we lost in that 19% decline from February 19th through April 8th. We've had earnings, however, almost be cut in half. Earnings growth went from 13% at the end of 2024 down to 6.8% as of June 30th, this being for the full year 2025. So that was a concern. That was across the board. So the S&P itself was a 50% reduction, but in terms of sector, essentially every sector saw earnings growth cut. That pushed the S&P 500 PE on forward estimates to above 2 standard deviations from the mean, and the mean being a 20-year look back. We looked at the CNN Fear Greed Index, and it had registered extreme greed, and that usually is a good contrary indicator. And we are approaching the more challenging part of the year, seasonality. August and September have posted average declines. September has been the only month to fall more frequently than it has risen. And October, people get spooked by the market in Halloween month for good reason, because October has had about 35% more volatility based on standard deviation than the average for the 11 months of the year. So there's a lot for investors to worry.
However, October is the best time to buy stocks.
Absolutely.
Are we going to get it again? Is it possible? Or is this just this speculative craze going to push right through the seasonal weak spot?
Well, I think it could end up disappointing those who are waiting for a deep sell-off anyway. What is it that's causing the market to work its way higher? First off, it's the trade victories. I think that's been a positive. We've seen broadening participation, not only in terms of the number of stocks in the 500 that are moving above their 50 and 200-day moving averages, but the percentage of those sub-industries. We are now above the long-term average on both the 50-day, 200-day, and the combination of those two measures. So we're seeing a broadening of participation. The sectors are trading within that one standard deviation. Only industrials is now above that. So that's why I'm saying that I believe we could still have some more upside, because historically the market tends to advance anywhere from 7 to 10% beyond the point at which we recovered everything we lost in the prior correction. And that usually happens in the following 4 months or so before we hit another decline of 5% or more. So we recouped everything we lost on June 27th. So from June 27th forward, we're only up like 2 or 3%.
Watch the full episode of Wealth Wise by clicking on the link in the description.